Welcome to the E-commerce Profits Podcast, where we feature top founders and experts in the e-commerce industry and take an in-depth look at the struggles and successes in growing e-commerce brands profitably.
Chen here. I'm the host of the E-commerce Profits Podcast, where we feature top experts and founders in the e-com industry. And we go behind the scenes of the struggles and successes in growing a brand. Now, this episode is brought to you by Kronos Agency. If you run a direct-to-consumer e-commerce brand that is ready to scale and double your customer lifetime value through retention marketing, Kronos is your company. We've helped hundreds of brands scale profits with email, SMS, and mobile push while getting an average of 3,500% ROI from our efforts. And we've worked with brands like Truly Beauty, Elias Skin, Dr. Living Good, and many more. Now, the next step is to email us at sales@kronos.agency, or you can go to kronos.agency to learn more. Today's guest is Alan Chen. Alan is a certified public accountant and also one of the founding partners of freecashflow.io, a leading accounting and consulting agency based out of Los Angeles, California, focused on helping online business owners keep more of their hard-earned profits. And they do this through proper tax planning, cash flow management, and many more. Alan, welcome to the show.
Hey, Josh, thank you for having me, and thank you for such a great introduction.
Awesome. So let's get started with your background. How do you end up running an agency, working with online business owners? And I know you work with a lot of e-commerce business owners. So I'm curious about your background, how you ended up in this crazy world.
Yeah, that's a great question, Josh. Oh, it was a little bit crazy story. And, just go back in the beginning. I'm like Josh says, I'm a CPA, certified public accountant. I have my master's in accountancy, and I've worked in a lot of, I would say multinational big firms, and from my experience there, I actually started family 2 years ago. And then last year with COVID happening, I actually started looking into, drop shipping and Shopify. And it really piqued my curiosity because everyone was doing it. I was like, what is this thing? So at first I was just watching YouTube videos and looked like just, lurking in the forums and seeing what people were doing. But then one day I was just like, you know what? I'm just going to dive in and see what happens. So I kind of just did that. I picked out a product. My first product was this smart net massager. I call it Netflix because I thought it was very clever because it's like Netflix and chill, right? That was my little video ad that I was sending. I was like, oh, this is going to sell like pancakes, right? So it did not sell like pancakes. It flopped, I would say. I think I got at most 10 sales in my first month I was doing. I was like, okay, this is not working. But I mean, with that, I gained a lot of experience in e-commerce world. I have to deal with the Facebook ad blocks. I have to deal with how to talk to suppliers in China. I have to deal with like logistical nightmares, customer service. And I was like, man, these entrepreneurs are so hardworking. Like they have to do everything. They're the CEO of their company, but they're also every other position in their company. So I'm like, this is crazy. And me with family, I could really only dedicate, I would say like 11 p.m. to 3 a.m. to do this, right? So because the rest of the time I'll be with my family. So I was like, oh man, I only have 4 hours to do this, and I can do. I'm like trying. I would test all these products, and finally I did find one that kind of clicked and kind of worked out, and I was able to scale a little bit. But during that journey, I also heard a lot of e-com owners that started struggling with accounting and tax issues. They would either post in the forum or talk to each other on Discord with some kind of chat channel saying, oh man, I made it to a certain level. What do I do about tax? Like, am I in trouble? I haven't done it. I haven't done it for the last year. What can I do? And then something clicked in me. I was like, oh, I'm a CPA. I'm just in disguise also an e-com owner. Like, what can I do to help these guys? So me and my partner Stanford was like, yeah, maybe we should take a step back and really niche and say, well, now that we've seen how e-com works in the world of e-com, let's see if we can help them by having an agency dedicated to just e-com and online businesses. So that's kind of like how we got in business. And so far we've been, doing pretty well as far as it really niching down and helping these guys. And they really appreciate, I guess, someone that really focuses on their area of business and really understand their lingo and can really connect with them, I would say.
And I was just telling you before we started to record that it's such a valuable thing and experience to have, understanding what online business owners are going through. Often a typical CPA or an accounting service provider often don't understand what the heck you're doing in the online space and how it's possible to hold no inventory or have teams in multiple locations and having a payroll spread out all across the world in different currencies. And it's kind of hard to find a good partner on that front. So tell me about tax planning. Now it's something that we kind of put off till the last minute, but I do think that it's really important because a dollar saved is a dollar earned, obviously.
That's a good model.
And as an online entrepreneur, online business owner, why should we care?
Yeah, that's exactly a good point, Josh. So what we kind of try to educate the client base that we have on is that a lot of time tax planning is really neither non-existent or left to the last minute, right? So most people outside of accounting world, they have this misconception or this myth that tax season is April 15th, well, this year because of the pandemic, May 17th, right? So it's like, don't need this time. I just need to file my taxes, get it in time, and there, I'm done. Worry about next year, right? And I would say that's actually the last step. If you hire a good CPA, they're planning the whole year before that, right? They're watching out for you every month on what deductions and credits you could possibly be taking based on how your business is operating, right? Because really, if you think about it, when you're in April, you're already too late. The whole tax year, which is last year, so for us, it would be the 2020 tax year, right? So January to December 2020 is over. There's some stuff you can still do now that you passed that period, but a lot of it is you should have already planned for it and done the year before, right? So, for example, a lot of I'll say ecom owners, they're probably what we call cash basis. So they only care about cash in, cash out. So they earn revenue, cash comes in, they count that. They spend things on Shopify ads or ad spend, that's cash going out. Very easy, right? In thinking of that. But what you can do is, because you're cash basis, there's a lot of way at year end you can play around with cash. When I say that, there's not any legal thing. It's really just a way where you can, say you're looking for more deduction that year. You can go ahead and buy up next year's inventory. That'll be a great way to get a greater deduction that year. You can also prepay for software licenses that you're going to use anyway, right? That's two benefits. One, during an annual license, you usually save a little bit of money, right? They usually give you a little discount. And two, you can count that whole year of software license costs as part of your tax deduction the year before. Now, those are just some samples, but those things are things you have to do the year before during the tax year. If you wait till April till you file your taxes, there's nothing in an accountant. They're not magicians. There's nothing they can do for you at that point, right? So that's why we always work with them. We're not like just a tax preparer that just does your tax, like an HR block or TurboTax and then disappear, right? We're here for you the entire way. And I think the benefit of that is we basically guide you, let you know what you can take the whole year. So at the end of the year, you see that you accumulated all these deductions, all these things that you have done, and it actually adds up to a pretty significant amount of tax profit back in your pocket.
What are some of the pitfalls that online business owners, especially as they're scaling from hitting their first 1 mil per year to the next 10 mil? What are some typical milestones and pitfalls that you see happening in these?
Oh yeah, that's a great one, Josh. So one thing that we have seen from people that have been scaling really, really fast, ecom owners, is they don't really take sales tax seriously, right? Because I think for them, they only focus on the federal and state level taxes they have to watch for. But sales tax nowadays is really going to bite you in the butt. The reason is with the whole that court case, which is the South Dakota Wayfair, it kind of changes the game of how they determine nexus, right? Nexus is basically an accounting term or an IRS term that says where and what state are you affiliated or have a connection with that you will have to pay sales tax for. So a couple examples of nexus in the old definition, which is physical nexus, is you are physically in that state. You have a warehouse in a certain state, say Florida. You have employees in another state, say New York. And then maybe you have a wholesaler agreement in Texas, right? Just a few examples. That's physical nexus. But nowadays, with the new rule change, because of that court case, there's what we call economic nexus. Economic nexus is what's really impacting online business owners. What economic nexus is that it doesn't matter if you're not physically connected to an area. It's all about how much sale, right, of concentration of sales you have in a certain state. So if you have sold, 100,000, net massagers to Wisconsin, right, or to South Dakota or to Michigan, right, that's what's going to trigger that threshold where that state's going to come after you and say, hey, you should be remitting sales tax to us. right? And the other thing is that some e-commerce might not know is they think that sales tax is just one rate per state, right? So if you're selling to California, you just pay a 9.5%. I made up that number. It changes all the time, but say the California is one of the higher states, so 9.5. But what they don't know is every county, every city, every like local jurisdiction also comes up with their own sales tax rate. And what you have to do is you add all these little rates with your state and state sales tax rate to get your combined rate for that state. You see, so it's a little bit more complicated than people think it is, and that's what why when we pick up a client, we do that kind of calculation for them. We look at their whole Shopify customer listing, we break it out for them, and really try to do segmentation of not even what state they're in, but what county that item got shipped to, what city got shipped to, what zip code it got shipped to, and then see are there different rates affecting them because of that. So with businesses that have hit, I would say 7-figure or 8-figure, they really need to get ahead of that because they're for sure going to trigger a lot of state thresholds in those cases.
What's the worst case scenario? Let's say if I mess up my sales tax calculations and I underpay or I don't pay like sales tax in a certain jurisdiction, what's going to happen to the business?
Okay, that's a great question too, Josh. So there's two things. If you at least attempted to file your state sales tax return, they're happy with that. They're like, okay, this guy is trying to be an honest merchant and he's making an effort to pay. Maybe he didn't hire an accountant, didn't hire a CPA, so submitted the wrong amount, right? They're less likely to penalize you doing that. Versus the second scenario I think you talk about, which is you don't submit at all, right? You don't take any action doing that. That they really frown upon, a lot, and it really goes state by state. But some state, their like interest and penalties can be as high as 22% of your revenue. And penalties that you have to pay in addition to what you owe already in sales tax.
Do you say you said revenues?
Yeah,
not profits.
So you really gotta some states you really gotta pay attention to and not like it's better if you're just upfront with them. So we do have clients that come to us and are behind, right? But what you can do is you call up that state, and this is a great tip for people out there who are behind on their state sales tax. You call up that state and say, hey, I'm an online e-com seller. I think I have triggered the threshold in your state. What can I do? They're very nice about it. They're like, oh, look at that. This is an honest guy trying to make an honest living selling online stuff. They didn't know the rules of our state because it is confusing. And they're like, yeah, we'll work with you. We'll work with you. Don't worry. We waive the penalties as long as you are honest with your information and how much sales you have made. So they really rather you upfront and volunteer that you are selling. You do have a concentration of customer in the state rather than you just hiding, right? And then just pretending this doesn't exist. Oh, I didn't do this. I didn't sell in your state. Yeah. Not an online business.
You said, Alan, threshold. So is there a certain threshold below which sales tax do not apply, or how does that work?
Yes. So usually the mark is 100,000. Okay. Each state can set their own, but what we have seen is it is at least 100,000 because that's what that court case did. It's 100,000 for 200 transactions.
It's 100K or 200 transactions.
But every state's different. For example, California, that number can be as high as 250, right? Yeah. And then some state it's somewhere in between that, right? And then they'll have little rules that you really gotta know. So some states are more strict where as soon as you trigger, the next month they make you pay, right? Some states are nicer where they say, okay, you trigger, but we will let you wait till the first day of the next year before you have to submit your payment or before you trigger, right? So those are things that are little strategies that we also utilize while e-com owners, and that there are ways, right, where say you're very near a threshold for a state, right? Let's give, let's say, I don't know, or Washington State, and you're at 95,000 for that state, and you're like, and we tell you, it's like, so is it, now you have 15 days left in December, is it worth to keep advertising and selling to that state? And how much revenue are you going to earn at 15 days versus you taking that ad dollars and just exclude Washington and sell to other states, right? Where if you're at 95,000, you don't trigger sales tax that state. So you may save like 8,000-9,000 from that state, right? Just off the bat, just knowing this information ahead of time and knowing, oh, if I just stop selling to the state, I don't have to pay that year. I can wait till next year until I'm way over that 100,000 mark. Does that make sense, Josh? Yeah,
that makes sense. It's like, so it's kind of optimizing how much you're paying in any given year. And it's not avoiding tax, but kind of optimizing the amount that you pay such that you're not messing up your cash flow.
Yeah, it's playing within the rules. I would say that's the best definition.
Playing within the rules.
Playing within the rules. You knowing the rules,
Yeah.
and I'm saying you say it's 100,000. Well, I only have 95,000 in sales. Now what? Okay, you can go. It's like you don't go over that number. What can they do to you, right?
Makes sense.
That's the thing. We did not. I would say break any laws, right?
Yeah.
We just play within your rules. We stay under the threshold. Maybe it's even like $100 less than your threshold. Well, if your rule is 100,000 above, we have to report and submit. We didn't hit it.
Makes sense. And could you give us an example of a typical online business owner that you work with, and what's that process like, and what would savings look like? Is it just like saving $1,000 a year? Or
no, it's usually we only work with, I would say, 6-figure ecom owners, and really specifically owners that have made around like 300K more annually. The reason for this is, we don't want to work with any clients that won't have a good experience with us, right? And from all the data we have collected over all the clients that we have, we kind of are able to do an apple to apple comparison between brands and between industries in online business, and say, this guy is able to get this much savings. Why can't this owner also? What is he not doing, right? So it really gives us that data aggregation to compare also, which is one of the advantages, I would say, going with someone who's niche in your area of business. And to answer your question, I think it really varies between clients and clients. And the reason I would say that, because every client has different amount of ad spend, different account of operating expense. Some clients have employees, right? Some clients choose to go the VA only route, right? Some clients do a lot of affiliate marketing. They have rev share going in there. So it really changes the calculation. But what we can provide is, what we do is we do a monthly report, a recommendation report, where we tell clients, hey, this is where we think your business is going. We see your cash flow. We see your trending, your gross margin percentages. And this is what we think you should be doing to optimize your tax situation for the year. And then we do that with them every month, so that at the end of the year, they're in actually a much better situation than if they weren't doing it, right? So I don't know how to give you a specific number, but it's a lot more than 1,000. But I'll say, we have gotten clients, anywhere between 50 to 100,000 in tax savings.
That's incredible. And that's 50 to 100K in basically profits. That's saved. That's not revenue anymore.
No, that's totally true. And that's that could be 10 to 15% more a profit that they get put in their pocket this year if they didn't do the tax planning correctly.
Exactly. And now let's talk about tax havens. We spoke a little bit about that before recording, but tax havens, I'm based in Singapore, so I pay 17%.
That's amazing.
Corporate tax flat, right?
That's amazing.
Before deductions. So what's your advice for US based businesses, LLCs? What should they consider, and what are the options available to them? Because I think a lot of people have a question like that.
Yeah, they really do. We have a course out right now, and this is one of the modules that we teach. So one of the things we emphasize to owners that have I would say, the flexibility of being anywhere, right? Since you own an online business, you don't have a physical presence most of the time anywhere. You should be flexible in where you choose, right? You should actually choose the most, I would say, advantageous state or even country to operate your business out of that give you the most tax advantages. So we encourage anyone, like, I have a family, I have a baby, so it's harder for me to move out of California. I wish I can, right? I wish I would get a lot of savings in a different state. But for someone who's single and don't have that family obligation tying them down, and they're running a successful ecom business, we highly encourage them to, for a small move, just go to a state with first no state income tax or no sales tax, right? Those are two great moves. A couple of states in mind that fits those categories, like say Nevada, Texas have no state income tax, or Oregon have no sales tax. So there's a lot of states like that can help them. If they could just move to that state and they run their business from there, will be the primary state they have to pay taxes out of, right? But then even further than that, if you're running a wildly successful business, you can also just skip the whole U.S. tax system completely, right? Where you can go to a Singapore or a Hong Kong or a Malta or Malaysia, right? A lot of these like countries who are very, I would say, pro-business and will love for business owners to go to them. They have very easy ways to incorporate, and they have very friendly tax rates. And they have probably great talent pools there and very cheap labor also in some of these countries. And they can really run their business from these countries, and they save way more taxes than they would have in the US taxes. Like I was so jealous when you mentioned, Josh, that your tax rate is like 17%, because in the US it goes up as high as like 37, 39%. So that's crazy. Like that's like what, 22% just difference right there off the bat, right? Like just think about how much your revenue is times 22% if you're in the US. Yeah, you wouldn't like that at one bit.
That's just crazy. That's insane.
Yeah. So if they don't want to move internationally, we do recommend that they at least think about moving to a state that has better tax rates. That's move number one. Move number two would be to choose a better tax haven country.
Tell me a little bit about Delaware. I know that Delaware is like a mini tax haven in the US. How would that work as as an LLC that already has incorporated in another state? How would someone take advantage of that?
I'm so glad you brought that up, Joshua. So I think there's a common misconception that anyone can incorporate in Delaware. No, that is true. That's completely true. But the thing with it is most states, they make you do what is called like reciprocal incorporation. So for example, I'm in California, right? I have also, when I started my agency, thought, hey, why am I paying these ridiculous California LLC rates when I could just incorporate in Delaware, who's known to be a sort of a tax haven, and do that? But actually, from talking to a lawyer, they were like, no, you can't get away with that. Even if you incorporate in Delaware, California is going to be like, well, you live in California. You're going to have to also, incorporate in California only. So it makes it sort of moot. So you might as well only incorporate in California and not have to deal with the extra paperwork of having like two LLCs outstanding. Now,
I see.
With that said, for international sellers, who want to have a LLC in the US, huge advantage, right? Since you guys don't reside in any state in the US, you have the pick of the litter. You can literally pick any state you want to incorporate in, right? So you can choose a Delaware. I think Wyoming, Wisconsin, and Nevada are all great states that you can incorporate in. And you can take advantage of those really low registration rate, low LLC rate, the very little, I would say, oversight over your business, versus a California where, you get this, I can make no revenue, Josh, and they will still make me pay $800 in franchise tax, was what they call it. So I can make no money this year, right? California will still take $800 from me.
Wow,
crazy, right? So it's actually a huge disadvantage if you are drop shipping and just want to start a business in California, because up front you're like, oh man, I have to deal with this $800 if I if my net massager doesn't work out.
That's tough.
Yeah,
it's really tough.
Yeah. It's great for international sellers who's trying to incorporate in the US, I would say.
Gotcha. Besides aside from tax planning and bookkeeping and all these stuff, what are some serious problems or issues that you've seen high growth e-com brands face that they're not paying attention to?
Yeah, so I'll mention two things that really come to mind for me, Josh. One thing is, a lot of time when businesses are in high growth mode, they forget the little things, right? What we have seen is, when we analyze a company's income statement, right, where we look at their gross margin and we see it's trending down, and we're like, why? Like you're making more and more revenue each month. Why is your gross profit margin doing worse? Like, and what that translates to is basically less money for you, right? Less money that you can put in your pocket. But when we would dig into the numbers, and we discover is that their suppliers were slowly creeping up the rate for their inventory, right? And they were so busy with their operation, they just like, whatever, it's 10 cent here, 20 cent increase there. They just let it happen. But when you are operating at those kind of volume of units that you're selling each month, it catches up fast. It adds up. That 20 cent increase per item adds up fast when you're selling like 10,000, 20,000 units of it, right? So what we tell them is, you're running such a big business, but don't forget to negotiate, right? Like you have all this international, I would say, supplier network available to you. Don't forget that you don't have to stick with that same supplier. Don't forget to go back to them and say, hey, I'm doing such high volume with you. Why are you charging me this? And if they don't like it, like they say, oh no, this is the best way we got. Trust me, the walk away method works 9 out of 10 times. They will magically find discounts for you all of a sudden. Like, oh, you're leaving me? You're leaving this, like you have a $3 million business. You're not working with me anymore. Oh yeah. they will find ways to lower their rate. Trust me. And then what we find is clients that does this, they start drastically improving their profit margin after that. But like it's just the little things, right? It's kind of like for me personally, it's like we have car insurance in the US. We kind of that's something we just auto pay, right? Car insurance. But then if we don't realize that, oh man, it keeps going up every rate. If you just keep increasing my rate, but if you call them up and threaten to leave, something like, oh no, I found some discount. I found a family discount for you. Or you're a CPA, got another discount for you. And then magically that rate goes down, and that adds up, right, in the household budget. So if that works on the household side, it definitely works on the business side. So, and those are much bigger numbers you're dealing with. And the second thing I would say is, a lot of time we find ecom owners afraid to let go. They're afraid to hire out because they're distrustful. Maybe they got burned by VA who didn't do customer service well, didn't do order fulfillment well, and they're like, oh, I'm gonna do everything myself, And we see people because we talk to them on Slack, right? We have a Slack channel for each of our clients. We see the green light still on around like 3 a.m. or 4 a.m. We're like, dude, what are you still doing up? Like, are you still working? They're like, yeah, I have some customer inquiries. I'm like, dude, you're a CEO of a company that does 7 figures. Why would you be answering your own, like you should be training someone to do this for you at this point, right? But it's so distrustful. They think someone's going to do it wrong. They think customers are going to get mad that they don't let go. And we don't push too hard on that fact because it's their business. But we do say, hey, we have seen examples of clients that are able to scale so much better because they let go, they hire out a great talented team, each one expert in their area, right? Maybe one that's, for example, they hire your agency, someone's really good at email marketing, someone who's really good at site design, someone's really good at supply relationships. And when they let go, they can focus on big picture stuff, right? The things that actually move the needle, that drive the business even further and even better. And we've seen that when businesses are able to do that, just give these things to talented people who've only focused on one niche to work on it, and they only focus on what really drives the business forward. They are quickly able to grow their business beyond a point that's imaginable. While those people who still want to do everything themselves, I don't know, Josh, like, I think like the reason you're an entrepreneur is you want to leave behind a 9 to 5, right? Like you don't want to have a boss and have to listen to someone anymore. But if you're working
freedom of time,
freedom of time. But if you're working 16 hours a day, where's the freedom of time?
It's just a nightmare.
Like it disappeared, right? Like where like doing that, you're kind of, you were in one prison cell and now you just move over to the next one. And that's in my opinion, that's you didn't get out. Exactly, you didn't find the financial independence you're looking for. And when you became an entrepreneur, that has to be one of your goals, right? When you become an entrepreneur, that has to be like when you think about like, why am I doing this? Why am I working so hard? Right? Like maybe a reason is to provide for yourself. Maybe a reason to provide for your family, right? Or provide for your parents who are aging. And there has to be a way of saying like, okay, I'm providing for myself. At the end of the day, I want this as a very successful, as large of a business I can grow it to. And then one day be able to maybe exit the business, have a big payday, and then move to Thailand, right? And then enjoy a villa there, right? But then not if your head is always like in the details still. So you're not acting like a CEO. So that's a big problem we see from clients. And we would try to encourage them to not do that, to try out other people. There are good people in the world who's going to help you grow your business, who won't make false promises to you and will actually deliver those results,
I agree. And now for people listening, it's kind of hard to piece together the different steps that we need to take, especially if we're really starting from a point where everything's a mess and I don't know where to begin with. But you told me that you created a course called Tax-Free eCom, and it's published. So
yes,
tell me a little bit more about that. And you mentioned that you got a little bit of a special offer for our listeners. Tell me more about that.
Definitely. So tax-free ecom, which is called Tax-Free Ecom Hyperdrive Your After-Tax Profit. The reason we spent 3 months and pouring all our industry knowledge into this course, me and my partner Stanford, is we really realized there's a gap that we're not covering, right? Because we're serving 6-figure guys. There's a lot of people DMing us who either just started or maybe just made like $5K a month, who are also very worried about tax and accounting. They can't sleep at night thinking like, I made this bit of money, but what do I do with it? How do I report it? Who do I go to? Is that something I have to worry about? Is sales tax something I have to worry about? I keep hearing about it. Like so many questions, right? And what is the first thing people do when they have questions? They Google it, right? But then Google gives you a lot of different answers, especially when you Google very technical things like this, right? They like one person might tell you one thing, another forum might tell you another thing, and you still get more confused at the end of the day. So the course is kind of like our answer to that. It's kind of like a definitive answer book for these guys about tax, accounting, and just operational know-how about business strategies they can implement for their business every step of the way. It kind of sets that foundation right from the start, so that as they scale their business, they're able to utilize what they learned from the course to cover themselves, not fall so far behind, know what's the best, I would say, fundamentals to have as far as bookkeeping, as far as tax planning, as far as strategy they could be using. Now, when this course is not, of course, asking them to do this all themselves. This course is saying, hey, if you eventually go to a stage where you need a CPA or an accountant to help you with this stuff, you know the right questions to ask, right? Even if you're interviewing someone who's an accountant, you're like, oh, do you cover this? Do you understand Aspen? Do you know what this is? They kind of can give you, they kind of be like, oh, this guy's knowledgeable. I can't BS this person. It's like, okay, this person knows what he's talking about. So, and it gives you a chance to be like, I can't work with this guy. He doesn't know anything about ecom, So it also gives you that perspective too. So we've broken it out into modules where we cover tax planning, we cover business strategies for them. We cover, what's the difference between all the corporate structures, LLC, C Corp, S Corp, and just being a sole proprietorship. We tell you what was our recommendation for sales tax. And at the end, we also have a course, a module on just financial independence, right? We really want to emphasize, hey, you made it. What can you now do with that money? How best can you cash flow and plan for the future, right? So that's what we really want to do for the ecom owners out there who have all these questions that we've seen online. So, and yes, and for the listeners out there of the podcast, we would love to give you guys a 20% off discount on course that we just launched last month. I'll send the code to Josh, but I think it's going to be Kronos20. So yeah, hopefully you guys can get some great value out of it. And one of the options for the course is a consulting call that you can have with me with, after you get through 50% of the course and still have questions, we're happy to get on a Zoom call with you and answer anything we can for you. And usually we can provide great value on those calls.
What's the link that people should go to for those listening?
Yeah. So if you're interested in the course, you can just go to freecashflow.io/course. And if you're interested in just, checking out the agency side that we have to offer, if you're at that 6-figure mark, you just go to freecashflow.io/book.
Awesome. Alan, do you have any final advice for people listening?
Yeah. One final thing I want to say, Josh, for the listeners out there is, now that you have worked so hard, I've seen entrepreneurs pour their hearts and sweat into the business. Don't give away what is rightfully yours, right? Don't give away what you rightfully earn in your business. And we see that mistake over and over again where, because they don't realize how tax and accounting works, they don't focus on it. They don't pay attention to it. They hire anyone off the street or their uncle's CPA who knows nothing about online businesses. And they just file the tax for them. And then they're just like, okay, you have to pay this much. I was like, I guess I do. This accountant told me to, right? But actually, they don't understand your business at all. They just took what you tell them and wrote it down. Like tax filing is essentially very easy, right? It's just a bunch of forms. Then you really got to understand the numbers behind them and why you're doing that to really get into tax planning. And that's where the tax saving comes from, right? It's not just filling out that form. So we really just want to tell them, like, really pay attention to it, right? If you get to a certain point in business and you're making a good amount of money, but at the end of the day, you see this is how much profit you have, don't give away more of that, right? Like, don't give away more of your profit margin to the government entities. They're happy to take it. Uncle Sam is not going to be like, yo, you overpaid. Here's some of the money back. No, they're going to take what you file and what you want to pay them. It's like, okay, this guy want to pay me this much? Sure, sounds good. So I would just want to say, just pay attention to that, right? So you don't have to, get the course or anything, but just Google things, just really learn this aspect of your business. It is very important. We have seen business owners who are able to recover another 10 to 15% profit just from paying attention to accounting, tax keeping. So it's no small fry. It really can give you that revenue stream, that cash flow to further scale your business and really grow it when you didn't think you had that cash flow remaining in your operation. So yeah, I would say just really focus on accounting and tax going into your business as you scale higher and higher, especially as you go into 6 to 7-figure marks.
Alan, thank you so much for being on the show.
Yeah, thank you so much, Josh.
Thanks for listening to the E-commerce Profits Podcast. We'll see you again next time, and be sure to click subscribe to get notified of future episodes.